Okay, so we're dealing with the payables control account, or what is also called the purchases ledger. Okay, these words are used interchangeably. Purchases ledger or payables control account. The purpose of this account is to get the total value of what you are owing to your suppliers. Remember, in the financial statements, you do not want to put every supplier's name under the current liabilities. So instead of putting all the suppliers' names on the current liabilities, you can total them up and put them in what is called the payables control account. All right. So this is that's what's going to be happening with this question here. Okay. Yes. So question is, the following information relates to ABC traders for the month of March 2024. Okay. So this is the opening balance for the control account for credit purchases, cash and checks paid to creditors, discount received, purchases returns, uh, contra set off, okay, and these other transactions. And they've told us the purchases ledger control account is prepare the purchase ledger's controller account, finding the balances, okay, to find out how much are we owing in total to our suppliers. Okay, so here, as I said, the secret here is this: if it increases the money you owe, credit. If it reduces the money you owe, debit. Okay, that is the general rule here. Okay, for most transactions, there'll be some transactions where there might be some minor changes, but I'll show you all of them. Okay, so this is how you open up the purchases ledger control account. Okay, so remember, this account is a liability account. And according to the double entry rules, increase in a liability, you credit. That's why, as I said, if it increases the money you owe, you credit, because that's an increase in a liability. If it reduces the money you owe, then you debit, because debits reduce liabilities. Okay. Yes. So we start first with the first information here. The opening balance they've told us is $48,000. Okay. So this is basically how much we were owing at the beginning of the month, $48,000. So since this is a liability account, so the balance comes on the credit side. Okay. So you say balance brought down from the previous month, 48,000. All right. Next, we're now going to go through each transaction. Okay. Yes. So here we have credit purchases, 125,000. So we bought on credit from our suppliers, and the goods that we bought on credit were worth 125,000. So colleagues, does this increase our liability or does this reduce our liability? Yes. It increases the liability. So it's going to go on which side, credit or debit? Wonderful. So we say 125,000. Okay. The next, cash and checks paid to creditors. So this is what we've paid our suppliers. So colleagues, increasing or reducing the liability. When we pay off our suppliers or when we're paying off our payables. So where does it go? Debit side or credit side? Yes. Wonderful. Okay. Cash and credit paid to creditors. So this is reducing the liability. Next, we have discount received. Okay. This is a discount that your supplier gives you. So, colleagues, if your supplier gives you a discount, does it increase the liability or does it drop the liability? Wonderful. So, where does it go? Debit side, right? Purchases, returns. This is where we have returned goods to our supplier. Okay. You buy on credit and then you find the goods that you bought on credit, some of them are bad or destroyed. So, you return these goods. So when you return these goods back to your supplier, does it increase the liability or does it drop the liability? The liability of paying them. When you return goods that you bought on credit, yes, yes. So it's going on which side, debit or credit? Debit. Okay. Next, we have the set off or the contra entries. This is a situation, as I said, this is a situation where someone owes you money and you're also owing the person money. Okay. As I gave an example, for example, as I said, Mr. Canaan, you owe me. So we say Mr. Canaan owes Mr. Muava a 1,000. A 1,000. So meaning, on according to me, Mr. Canaan is a receivable. Then I owe Mr. Canaan 1,200. Meaning Mr. Canaan is also my payable. Okay. Payable to Mr. Moore. So instead of I pay you a 1,000, you pay me a 1,000, then I pay you a 1,200. We can set off and say, okay, let's erase a 1,000 here. So if we erase 1,000, we say, okay, Mr. Kenan, we've erased the 1,000 that you owe me, and we erase the 1,000 that I owe you. That 1,000 that we've erased is what we call the set off or the contra entry. So when you do this settle for this contra entry, since we've cut off the 1,000 that you owe me, Mr. Kenan, so it means my asset has dropped, reduction in an asset. And since we've also erased the 1,000 that I owe you, Mr. Kenan, it means also my liability has dropped. Okay? So when there's a settle for a contra entry, just remember this. The receivable drops, the asset drops, and the liability also drops. Like in this case, when we say we're going to have a set off of 1,000, it means we're cutting off what Mr. Kenan owes me, reduction in an asset. Okay. And also we're reducing what I owe Mr. Kenan by 1,000, reduction in a liability. All right. So after we set off these 1,000s, it will mean I just owe Mr. Kenan a 200. Okay. Yes. So this set off, the contra set off, it reduces the liability and also it reduces the asset, how much is being owed, how much someone is owing you. So on the payables control account, the contra this set off or this contra entry goes on the debit side. Then on the sales ledger or the receivables control account, that same set off is going to go on the credit side because that's an asset account. Okay, so the assets reduce with credit. Any questions? Okay. Refunds from suppliers. All right, so also this one I need to explain. For example, let's say we have supplier X, okay, who is our payable. We owe supplier X 1,000 watch. Okay. Then by mistake, we pay our supplier, we overpay our supplier. Let's say we pay him 1,200. Remember, when you're paying off your supplier who you owe, reduction in a liability, you debit. So you pay 1,200. So basically, we've overpaid our suppliers, our supplier. So since we've overpaid our supplier by 200 kwacha, when we raise 1,200 minus 1,000, it means our supplier is now owing us 200 kwacha because we've overpaid him. Okay, we're supposed to just give him 1,000, but we've given him a 1,200. So we've overpaid him by 200. So it means now our supplier is owing us. Okay, so what our supplier should do, he needs to refund us this 200. Okay, so in order to refund us, we need to credit the account here because this 200, which is an overpayment, is on the debit side. Okay, this overpayment is on the debit side. Okay, it was supposed to be zero to say that our transaction is over, but there's a 200 on the debit side, which means our supplier is owing us. So to erase this, our supplier we have to credit our supplier once they pay us, so that we erase this overpayment. Okay, so you say 200 minus 200, it means 0. So this refund comes on the credit side of the supply. Okay, it comes on the credit side because we're erasing this over how much they're owing us, the money which is on the debit side. Right, so refund from suppliers you put on the credit side. Any questions? Then here we've got interest charged by creditors. This means we delayed to pay our suppliers and they've added on interest for delaying to pay. So since they've added on interest, it means we are owing them more. Okay, so since we're owing them more, we credit. Increase in what you owe the supplier, you credit. Okay, so now we balance off the accounts to find out how much are we owing now in total to our suppliers. Okay, so we total up the debit side. We say 98,000 plus 4,200 plus 3,800 plus 1,500. So the debit total debit total 107,500. Then the credit total say 48,000 plus 125,000 plus 600 plus 800. 174,400. So you put the large amount on both sides here. So we put 174,400. Then here 174,400. Okay. So since the debit side is lower than the credit side, so you're going to say balance brought down, balance carried down. Since this is March, so we're going to say on the 31st March 2024, balance brought down. You're going to say you're going to subtract these two amounts now here, the debit and the credit. All right. You're going to say 174,400 minus 107,500. Okay, we get 107,000. 66,900. Okay. Then on the next month, we say 1st April 2024, balance brought down 66,900. Okay, so basically this is how much we're owing our suppliers in total. So in the balance sheet, under current liabilities on trade payables, you will see a 66,900 kwacha.